Welcome to Talk Tickers. Today, we're breaking down SAIC's pivotal third quarter earnings call from back on December 4th. Now, on the surface, this looked like a pretty mixed report, but the market's reaction, it was absolutely explosive. So let's dig in and figure out exactly what happened and why this might just be a huge inflection point for the stock.
All right, let's just start with the market's verdict, right? The stock absolutely soared, up over 16% in a single day. But here's the thing that's so interesting. This massive pop came on the back of some pretty complicated headline numbers. It tells you right away that the real story is a little deeper.
Okay, so that leads us to the big question. With revenue actually declining, what on earth caused this explosive reaction from investors? Because it definitely wasn't because sales were booming. Something else was clearly at play here.
And this slide really captures that core conflict. On the one hand, you've got revenue dropping more than 5.5%. Great. But the market, it just completely ignored the top-line weakness. Why? Because it was squarely focused on that bottom-line beat, and maybe even more importantly, on the future.
So let's look at the raw numbers. Yeah, revenue contracted, no way around that, but the earnings per share beat, it was massive. And the cash flow generation was just incredibly strong. I mean, look at that. From just $9 million a year ago to $135 million. That is a huge operational improvement.
You see, the real story here wasn't just about the numbers from the last 3 months. It was all about the new management team's aggressive, forward-looking commitments. That's what totally reset the narrative for this company.
And the interim CEO, Jim Reagan, he came out and laid out a super clear plan to drive efficiency. He basically said, we're shifting the narrative here. It's not just about revenue anymore, it's about profitable execution. And that really got the market's attention.
And this right here, this is what Wall Street really keyed in on. Management raised its full-year guidance by a substantial 40 cents. That is a massive signal of confidence, basically telling investors, we feel really good about where this is all headed.
And they backed up that confidence with a huge capital return plan. They announced their intention to buy back $1 billion of stock over the next 2 fiscal years. That is a powerful statement.
So what we're seeing here is a whole new playbook. And it's really clear. They're going to prioritize aggressive share buybacks, make smart strategic acquisitions like the SilverEdge deal, and of course, maintain that dividend. It's all about shareholder value.
You know, this wasn't just another quarterly earnings call. This felt like the unveiling of a new strategic direction for a company that, let's be honest, the market had pretty much left for dead.
And look, this context is just so crucial. After a really rough year of underperformance and disappointments, the stock was priced for failure. I mean, expectations were on the floor. And that created the absolute perfect setup for this kind of turnaround narrative to catch fire.
So, in literally one session, the market repriced SAIC. It went from what you'd call a broken value trap to a classic self-help story. The whole investment case shifted from waiting on the market to betting on management.
So these are the key pillars of that new plan we've been talking about. Simplify the business, cut costs, buy smart technology, and return a ton of cash to shareholders. It's a pretty compelling package.
All right, so with the stock already up over 16%, the question on everyone's mind has got to be, what's the trade from here?
Let's break it down. We've got to figure out if that big jump was just a one-time pop, or if this is actually the beginning of a real sustained re-rating for the stock.
Okay, so here's our call. We're rating this outperform. We believe this quarter really does mark a fundamental inflection point for the stock. This isn't just a flash in the pan.
So the path higher from here is pretty clear, but it all comes down to execution. They have to deliver on those cost savings. And there's one big thing to watch, a large upcoming recompete. A win there would be a huge validation. If they can do that and keep buying back stock, we think the market will gain confidence and give the stock a higher valuation multiple.
So here's the prediction. We think the stock will probably consolidate these gains for a little while, kind of catch its breath, but then it's going to grind higher as management proves they can execute. The thesis here is to own the stock on the belief that the market will reward that consistent execution. Our target, we're looking at $120 plus over the next 12 months.
And of course, this is not financial advice.